Father, in the mighty name of Jesus, I want to say thank you for everything that you've done for us. As we are about to study, we pray that God will protect and guide us and help us. We commit our tutor into your hands, that Father, we grant him retentive memory to help us. And as we also learn in Father, help us to also understand and then be able to grasp this concept. We thank you for everything you've done in Jesus' name. Amen.
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 Okay, so am I saying the board or the question? My screen, what do you see? Is it the board or the question?
Please, question.
The question, okay.
The question.
So let's go to the 13. Well, we're solving the specific and then existing together. Let's do the 13 so that we'll come to the other questions. Yeah, did you face any difficulty in the 13?
A lot.
Okay, let me know. What was the difficulty?
There was a small trick be like that, but we hope we did the right thing.
Okay, so what was the trick?
The trick was that they said they took a loan in I. When you're going to II, the existing loans, you find the loan, the specific loan again. So we don't know.
No, don't mess it up. The I is the medium term loan. The
Yes.
II is existing. It was 28 million loan from Bank A. Just that they paid some and it's left with 25. And I told you that we always use the loan balance outstanding at the end of the year. In calculating the work. I getting it. In calculating the work, we always use a loan balance at the end of the year. Friends, I believe you can hear me, right?
Yeah, I can hear you. Was.
So it's from his
Yes,
end.
sir. We can hear you.
So, Yankumasan Hinkru, please check your network. Now, so please, you use the balances at the end of the year in calculating the work. I think I made mention of it yesterday, right? I told you that they can give you two balances at the beginning and at the end. It's the end that you use. We don't care when it was issued. All what you need, you need to use annual interest to calculate the work. Well, it is an annual rate that we are looking for. Please do get it.
Yes, please.
And so the I-25 million is different from the 25 million in II. Please do get it.
Yes, sir. I'm talking about the point, the second one in II.
So the second one, I running finance facility of 25 from Bank B. So there are two different ways. 25 million from Bank A and 25 million from Bank B. They are different, right?
Diego.
It's in a way the problem with
No, but you know why?
Yeah.
It was, I think, maybe overthinking, because when you check the second loan in according to the existing loan, the rate is the same as the I. So I was thinking the same loan they've repeated over here. Because when you calculate the 12% of 25 million, you get a 3 million. And when you check the I2, they say they paid 5 million off. So meaning it will be left with 20 million. So I took it as the same loan.
So your existing borrowing at the end of the year is 13%, 25 million loan. Okay.
Yes, that was the only one I considered, because I thought the second one was the same medium term loan that they took.
No. So the second one is 20 million loan. Because the balance is 20 million at the end of the year. So the second one is 20 million loan, and they are giving you the interest of 3 million. So it's not difficult. Okay, so please, any other challenge from the question? Or let's read, and after that, you tell us your challenges, okay? Okay, somebody should read for us.
Melodious or Cambodi?
This question, the Melodious Bebwai Bebre, Cambodian, question and I was saying it. There's a copy Cambodian voice there. They are very say. I'm going to use that. I'm showing a question.
Yes, please, you are showing.
Yes.
Please, can somebody read?
You say you want melodious voice.
A man who are not reading, remember, the monk answer, say, wait, say,
Question 13.
question.
On September 1, 2014, Spain Industries Limited started construction of its new office building and completed it on May 31, 2015. The payments made to the contractor were as follows. September 1, 2024, 10 million. December 1, 2014, 15 million. February 1, 2015, 12 million. And June 1, 2015, 9 million. In addition to the above payments, SIL paid a fee of 8 million on September 1, 2014 for obtaining a permit allowing the construction of the building. The project was financed through the following sources. On August 1, 2014, a medium-term loan of 25 million Ghana cedis was obtained specifically for the construction of the building. The loan carried a markup of 12% per annum payable semi-annually. A commitment fee at 0.5% of the amount of loan was charged by the bank. Surplus funds were invested in savings accounts at 8% per annum. On February 1, 2015, SIL paid the 6 monthly interest plus 5 million towards the principal. 2. Existing running finance facilities of SIL. Running finance facility of 28 million from Bank A carrying a markup of 13% payable annually. The average outstanding balance during the period of construction was 25 million. Running finance facility of 25 million from Bank B. The markup accrued during the period of construction was 3 million Ghana cedis, and the average running finance balance during that period was 20 million Ghana cedis. Required. Calculate the amount of borrowing costs to be capitalized on June 30, 2015, in accordance with the requirement of international accounting standards.
Okay, so let's look at this. So what was your challenge? Apart from honorable challenge, what was your challenge in this question? You see how important it is to solve a question before coming to class. Okay, well, once I get your challenge and I hate them more, you get to understand it the next time. Because of man, so
but as long as that is correct, that is another thing.
So what I mean, in solving it, you didn't face any challenge. You didn't have any problem with any section of the question where maybe you didn't understand or it got you confused or something. Okay, so maybe let's solve it. How we solve, maybe in solving you come out with the questions. So it's just a question. It's for both specific and what enterprise school. Is that not it? Hello.
Yes, please.
For both specific and enterprise. Okay.
Exactly so.
Now the workings that we are supposed to do will be for the work. Is that not it?
Yes, please.
We need to do workings for the work, and then by the nature of the question, if we think that the investment income too will be too long, we can do workings for the investment income too. So that after that, we just go and post them in calculating the borrowing cost capitalized. Did you get it? Did you get it? But I think we can do everything.
Okay,
together.
sir.
Okay, let's first go and calculate the work. Then we'll come to the borrowing cost itself. Okay, so let's see the work. So the borrowing, the rate, and then borrowing cost. So the borrowing is what? What's the first one? 25
That
million
is 25 at 13%.
at 18%. Then 20 million at that, but we know that it's 3 million, right?
Yes, please.
Then the 25 million will give us how much?
3.25.
3.25.
Yes, please.
So 3,250,000. So this will give us 45 million against 6,250,000.
6.25.
So the work will be equal to 6,250,000 over 45 million and 100%. So that will give us how much?
I had 13.89.
18.89. Please, did you all get
Please,
that?
somebody should check it.
But I'll say Obisun check you. Are you?
Yes, sir, it's right.
You are 18 point what?
89.
89. Okay. Let me check. I remember I was calculating the work. I used a different rate, so let me check. So let me go back to your question and check.
So here, when you read the question is saying that the
Not read the
interest
question. So
accrued was the period for the construction. So I don't know whether in calculating the work, we will limit ourselves also to the period of construction.
which one? You mean for the 3 million?
Yes.
Okay.
The running facilities,
You and me, let me
the
read.
markup accrued during the
Whilst you
period.
were reading, I was doing something that I was just sending the link to them. So let me read to see if indeed what we've
The
done
markup accrued
is
during the period of construction was 3
correct.
million.
No, you relax. You relax. So let's look at the first one. Running finance facility of 28 million from Bank A, carrying markup of 30% payable annually. The average outstanding balance during the period of construction was 25 million. Then this one is a markup of okay. Stuff like that. September 1st, 2014, Spain industry started construction of 8 new office buildings and completed it on May 31st, 2015. The payment was made to the contractor as follows. Okay. So they started on 1st September to May 31st, 2015 is how many months?
9 months.
It's 9 months. Oh, okay. Okay. I get you. So I think That should be the case. Okay. So we are looking at the borrowing for the whole, for the consortium. Okay. We are facing a situation where we have some borrowing, that is 25 million borrowing, and then we have 20 million borrowing. If you look at the 25 million borrowing, they said that the markup accrued during the period of consortium was 3 million. You understand? So it means that this markup is for the 9-month period, true or false? Did you agree?
That's where my challenge was. Because in the previous ones that we were doing,
so the markup accrued during the period of consortium was 3 million. Is that not it?
Yes.
yes, please.
They didn't say that the markup for the year, for the year 20, for the year up to whatever is 3 million. They said that the markup accrued during the period of construction is 3 million. Which means that if we want to use the 3 million to express the percentage, then the running finance facility, the 3 million is 9 months. So it means that the running facility to the 13% should be multiplied by 9 months. So that, because the construction period is just 9 months, so that we know that we are accounting for only 9-month interest, because the construction is for only 9 months. Please do you get it?
Yes, sir.
Let me pick my calculator to check something. I want to check an alternative if it will work. An alternative is so 3 million. So let's go to the board. Okay, so this 3 million is for, we don't know the rate that they use, but we know that it's for 9 months.
Yeah.
It's 9 months interest. Is that not it?
Yes.
So this one too should be by what? It should be by 9 months. So it means that this figure is correct, but this one has to change. Do I remember? And then this morning I just paid the calculator and I was calculating the work, but I didn't get what we got. So how much are you getting?
It's now
If
24.
multiplied by 9 months.
You get 24, 37.500.
24, 37, we'll figure where I did.
243,700. Yeah.
Okay. So this one will be
54,37,500.
3,750. So 5437. So please, the rate will be how much? I remember I got 12 point something.
12.08%.
4.08%. 4.08%. So this work is a bit different from what we have been using. What we have been using, they will tell us that the borrowing for the business at the end of the year was this and this. I get it. So we calculate the annual interest to calculate our work. But this one, they are giving us the borrowing. This one is not borrowing at the end of the business, at the end of the year. This one is borrowing during the period of consumption. That's why we are using the interest, the annual interest for the period of consumption. Just that the period of consumption is not up to 12 months. So restrict it to the 9 months. So the additional borrowing, this one deviates a bit from the ones we have been doing. Did you get it?
Sir, please, can you share the questions with us?
Oh, which
The question is
questions?
shared already.
Question I used from Thursday.
Some of us just joined.
Okay. They have, so you join from which page, please?
I joined from the PSA page.
Sound better. Friends, what's it?
I didn't kill him.
Yanti. It's too
Why
early.
no?
Auntie Dokas.
Oh, so what's it there?
Now we're
But are you on the Telegram page?
No, sir.
This thing can. Please, which page? Give us that page, please. Otherwise, I will leave you behind.
The March 2025. PSA March 2025.
March 2025. Sunday, we. Oh, yeah, J.
Robert. Oh,
We have to investigate
fasting. Sometimes which was it's not nice.
assembly. Oh.
You all heard it.
Hello, sir.
Okay, so please, I've sent you the lecture video. So click on that link. You see that there's notes and there are questions. You open the questions. You see the 23 questions.
Thank you.
Yeah.
Hello,
All right.
sir.
So I think we can make progress. Yes.
Hello. Yeah.
Yes, sir.
Please, per the timetable, I saw FR and CR today. Are the PSA students, do they have to join?
Yeah. So what happened was that we couldn't finish the borrowing course yesterday. I getting it.
Oh,
So they are
okay.
supposed to join for us to finish the borrowing course. Then
Okay.
they can go and sleep on the earnings special.
Okay.
However,
Okay.
please, students, join. You want me to do corporate reporting one day. Is that not it? The corporate reporting is waiting for you in level 3. So why don't you join and get any special once and for all? Did you get it?
Okay, sir.
Yeah.
Okay, sir.
Okay. So let's see. Let's go back to our question. All right. So what is the next thing we are supposed to do? We have been given some payment schedule. Okay. Hello,
Yes.
friends. We have been doing
Yes,
some payment schedule. The specific borrowing, the borrowing cost is the 12% and then the 0.5%. And then the sales surplus funds can be invested at what? At 8%. Is that not it?
Yes.
So when are we supposed to commence capitalization? 1st September, right?
1st September.
And then when are we supposed to end?
That is 31st May.
31st May 2015. Okay. We need to go and do some workings. What workings are we supposed to do? We are supposed to go and do workings on the temporary,
Investment income.
temporary income, or better still, the idle funds. And we get the investment income, okay? Then we also have to go and do workings on the general pool, but we have to know the respective amount that they took and when they took those amounts. Friends, do you get it?
Okay.
Okay, so let's do it as separate workings so that it will be easier for us. From the way I see the question, the workings may be plenty. If you should do it once, the word will not be enough. Okay, so let's go to the question again. Am I showing the question? Hello.
Yes,
So
please,
at
you are showing
a
the question.
glance, let's see when funds were available for investment. You got a specific borrowing. We are looking at the specific borrowing. Then you got the specific borrowing on 1st August, right? Hello, on 1st
Yes,
August,
please.
right?
Yeah.
So the fund will be available for investment in the whole of August, true or false? True or false? True. But remember that for the whole of August, we're not capitalizing borrowing costs. So such investment income will go to profit or loss or the statement of financial performance in public sector. Did you get it?
Yes, please.
Yeah, but we are interested in investment income and during the period of what? Construction. So let's see. So we are 25 million. Then what was the first payment that they made?
10,000.
10 million.
What's the
10
next
million.
payment?
8
15.
million.
This is where you are having you face challenges. You need to take
8
care of
million.
something that you need to take care of all the payments. All the payment will be made out of the 25 million. Did you get it?
Yes, please.
So the payment they made were the 25 million on I'm sorry, the 25 million is the loan. So the 8 million is the permit, right?
Yes, please.
It was made when?
September 1.
September.
And then the first payment is 10,000, right?
10 million.
Yes.
Good. So I know every student will do this, but there's a trick that can make you come back home. This one, if you don't run and don't come again test, you get it wrong. Let's read the specific way. It says that on 1st August 2015, a medium-term loan of 25 million was obtained specifically for the construction of the building. The loan carried markup of 12% per annum, payable semi-annually. The commitment fee of 0.5% of the amount of loan was charged by the bank. So in fact, the first amount that was taken from the 25 million is the commitment fee, true or false?
True.
Question no. Who be I said I know some style B, you understand? So
Yes, sir.
on 1st August, they are deducting what? 0.5%, which on my calculator says that 125.
125. Yeah.
Yes. Then on 1st September, we paid for the permit, 8 million. Then on that same September, we paid for the 10,000. So whatever that is
10
left,
million.
yes, 10 million. Whatever that is left is available for investment from September 1st up to November 30th. True or false?
True.
True.
Okay. So let's go and do that. And if we still have remaining amount, we just go and do that again. If more one
So we are here.
No.
When you say we
When
know
you
we
add
had the
all those
kakra,
things,
I'm fighting. So workings number 2.
You can't see your board.
They are not seeing your board.
Sorry, I'm still sharing the question. Investment income from specific borrowing. In fact, we know it to be specific borrowing. There's no need writing the investment income. So we want to start. The total borrowing. First August, please, what's the year?
2014.
2014.
2014. The borrowing was how much?
25 million.
25 million.
5 million.
25 million. Then, on that same 1st August 2014, we paid for commitment fee of 0.5% of 25 million. I'll give us how much? You said it's 100 and
125,000.
25,000.
then on, well, in fact, if you are looking at the investment income to be taken to profit or loss, that will be 25 million minus 125. That's what you invest for the first 1 month. Did you get it? Did you get it?
Yes, sir.
The whole 25 million will not be available for investment in August. It is the difference.
Okay.
Okay. You said first, please, the
September.
payment, the permit.
September.
1st September 2014. And the permit was how much? Is it the 10 million or the 8 million?
8 million.
Please, I'm taking the figure from you. So permit 8 million. Then the same 1st September 2014. The first payment for the consortium was how much?
10
was
million.
10 million.
So whatever that is left is available for investment from 1st September 2014 up to 30th November 2014. So that will be 3/12. What is the investment rate?
The investment rate is 8%.
12%.
Times 8%. Please, not 12.
Sorry, investment rate.
Okay. Please,
Sorry.
let deduct. What is the amount available for investment?
6.875.
6.8. I would want the full figure to avoid the
6,875,000.
Okay. So amount for investment. So 6,875,000. How much are you going to get?
I'm getting 137,500.
Yes, 137,500.
Okay. Let's go back to the question. After investing this, we have 6.875 million left. But the next payment, we needed 50 million. So it's that's the only investment we can make. Is that not it?
Yes.
Do you agree with me?
Yes, please.
Okay. So the investment income ends here. It should be the investment income.
Hello, sir.
Yes.
So, between
You
first
said it's
August,
137 or 500.
Yes, sir.
Please ask your question.
1,500.
Between 1st August and then the 1st September, that 1 month, can't you invest the idle fund?
Yes, you invest 25 million minus 125. But that investment income will be taken to profit or loss. Well, in our case, we're not capitalizing borrowing costs.
Okay.
So this will be our
my hand
investment income. Did you get it?
My hand is up.
Okay, Mr. Osman, I can ask your question.
Yeah. So, sir, my question is, with the existing funds, we cannot invest that one to end.
No, existing
Okay.
funds cannot be invested. It has an existing
Okay.
use.
Okay.
Okay.
That was where my challenge was.
Okay. So the next 50 million, remember, for you to know how much you took from the existing borrowing, the next 50 million, you must deduct the 6,875 from it. Did you get it?
Yeah.
Okay, so
We
let's
get
go to
8,125.
the borrowing cost on the specific borrowing. Because of the way the calculation is, we cannot do everything together. So I want to break them into sessions. So let's look at number 3. Borrowing cost to capitalize on existing borrowing. I think these questions can take all the 3 hours. The way it is. Each of the 3 questions is stubborn. Okay, so let's see. Borrowing cost to capitalize on existing funds. So let's see. That one is from the drawer date, right? So let's see. First, this one, the line out drawing stuff. First December, right?
Yes, please.
1st December 2014.
Hmm.
You needed
50 million.
50 million.
Yes.
But the specific balance was 6.85 million. 875 million.
875 million. Yeah.
So how much was taken from the existing?
8.125.
8 point.
125.
So 8,125,000, right?
25. Yeah. Yes, please.
Okay. So that will be at a rate of 12.08%, right?
12.06. Yes, please.
So from this date up to, so this one we are looking at from 1st December 2014 up to 31st, is it May? Is it May or June?
No. It's supposed to be December. Because
1st December
December one was
2014 or it's
Yes, please.
2013?
It was completed on May 31st, 2015.
May 31st.
So this is the cessation date, that's not it. So how many months? December, January, February, March. This one no suspension issue, so times 4 over what? 12. Do you agree?
Oh, okay.
Did you agree? Friends, do you all agree?
No, please.
No, sir.
No.
But
December
is it to
is
5
1 month.
months?
It's
January,
5 months.
February,
It's 5
March,
We didn't
months.
add April.
April, May.
It's
6
5
months.
months.
Yes.
It's 6
5.
months. Sir.
Hello, sir.
It's 6. Okay.
Yes, sir.
Yes,
So
sir.
times
6 months.
Yes.
times 6. Okay, that's okay.
Okay.
Not much. It's 31st May. Okay, 6 months. Okay. So you all understand now? Do you understand now? So do you understand so that we continue?
Yes, sir.
What's
up
happening
to
is that first, I hope I'm saying the question. 1st December, you needed 50 million, right?
yes.
But the specific borrowing left was 6,875,000. We said that the specific borrowing must be fully utilized before you take money from the existing, true or false.
Okay.
So we took the 86875, and then whatever that was left had to be financed using the existing borrowing, true or false. True or false.
January, February, March, April, May. Okay.
Please,
Yes.
true or false.
It's true.
Well, you're right.
Okay. We are going to face some issues. The next payment is when?
It was February 1st, 2015.
The next payment was February 1st. Hello?
Hello?
You said it was February 1st, 2020 what?
15.
15. Okay.
Yes.
Yes, please.
So that was how much?
12,000
12 million.
million.
Okay.
So
Let's see
February,
something.
February, March, April, May.
Let me check something. For 4 months, no doubt. But
Yeah.
we have some issues to deal with. They said the interest is payable semi-annually, true or false?
Yes, please.
Okay. So they also paid, so semi-annual, if you take 1st August and you add 6 months, when will it end? August, September, October, November, December,
August, September,
January.
October, November, December. January.
January 31st. So it's more or less like we are going to pay it at the same time like the February 1st, right?
Yes.
Yes. So the interest, the semi-annual interest, calculate because that one to us to be paid. But at that time, there was no specific loan. So that means they paid it with the existing borrowing, right?
Okay.
I said that this question is the most complex perhaps I've seen anywhere. So let's manage it while it's okay. So let's see. So 12% times the 25 million times the period of 6 months give us how much?
It's giving us 6125. 61 250.
250.
Please, I multiply the 12% by the 25 and divided it by 2.
No.
No.
Okay.
I
You're
said
getting
multiply
1.5
by
million.
6 months.
1.5 million.
Is what?
1.5 million.
5.
Why am I getting a different figure of my calculator? A minute, let me check. Just a minute. The loan interest will be
The board, please.
So we are not.
I'm calculating on my calculator.
Oh.
So 0.12 times 25 million. Wait a minute.
Robert.
Say a minute, let me. There are a lot of tricks in the question, so let me. Okay, so we have 25 million. Let's look at when it was issued. It's very important. It was issued on the 1st August 2014 up to, just a minute, let me see something. 25 million.
Also, I do whatever.
I don't know if what's up. So friends, let's see something here. That's a trick that I'm looking at. So let's see. You see, if you take a loan, okay. Hello, friends.
Hello.
Can you hear me?
Listen to you.
Assuming you have taken a loan
We can hear you.
Yeah, assuming you've taken a loan, okay. You are embarking on a project and you are using existing borrowing, okay, and it will last for 6 months. Let's take that 6 months, and the capitalization is starting in September, and the cessation is 31st it's at first, no, let's say it's ending on the 1st February, okay, which is the 6-month period. Do you know that the interest for August will be taken to P&L because any investment income in August is also taken to P&L. Do you agree?
Yes, please. We agree with
What
that
I
one.
mean, what I mean is that just take your time and listen. We are talking of the interest on the specific borrowing. Is that not it? We are saying that
Yes.
in August, any investment income earned in August will be taken to profit or loss. Do you agree?
Yes.
Do you agree?
Yes. Because at
Which
that
means
time,
that which means that any interest incurred in August also be taken to P&L. When in August, we are not capitalizing borrowing costs. True or false?
True.
true.
Good. So the borrowing cost that we are going to capitalize is going to be from 1st September to the 6-month period, the end of the 6 months, which is 1st February, which will be like 5 months. So even though it's a 6-month interest and we are paying from the existing borrowing, 1 month of the interest will be taken to P&L and 5 months of the interest will be capitalized. So it's the 5 months that will be capitalized that should show in our computation. Did you get it?
Okay.
Because I remember there was a trick on it. That's what I was looking for. Okay. So let's see. Let's go to the board. Is that the only payment? So we said loan interest, the principal, they were given that they paid 5 million. Is that not it? And then the third payment is how much? The third payment is how much?
No, the 12.
12 million.
Is that 12 million? Yes, yes. So let's go to the board. After that, I'll come to the first payment. I think I'll have to check it again. So let's see. So the date is what? First
1st February. February.
1st February. So that will be our last payment, right?
No.
Because the next one is in June. So that one we don't care. Right?
Very Bob.
Let's go back to the question. I'm saying that the next one is in June. If you check after 1st February, the next payment is on 1st June. At that time, we've ended what? We've ended the work. So the interest on the 1st June one will be taken to profit or loss. Please do you get it?
Okay.
Okay, so let's see. So 1st February 2014. Let's see all the respective payments. So there was loan interest. Loan interest to capitalize. That will be 5/12. So let me bring the date so that it will help you when you are revising. That will be from 1st September 2014 up to when? Up to let's say 31st January 2015. Exactly. Please, exactly. Please, exactly.
That is for the loan.
Yes, loan interest. So times 12%.
Okay.
Times 25 million. So that will give us how much?
Was why 1st February 2014?
I wrote 1st September 2014. No, this payment is on 1st February 2015. Sorry. Is how much are you getting? We want to know all the payments they made from the enterprise pool as at 1st February 2015. That's what we are calculating. Before you multiply by the work. So how much are we getting?
1,250,000.
Is what?
1,250,000.
1,250,000. Is that clear?
Yes,
Then the
please.
loan principal, they said is how much? Is 6 million or 5 million? The loan principal that they paid.
5 million.
5 million. Then they also said that the construction payment. Is this the third payment? Is the third payment, right? You said 12 million. If I'm wrong, then if you are wrong, then I'm wrong. You people said 12 million, right?
Yes, 12.
So when
Yes,
you
sir,
add
12.
everything, this amount they withdrew. So it will be at 4.08% times 4/12. This is up to 31st May 2015. This what is the
The total is 18,250.
actually Mr. Osman abo figure no more confirm me and say more gensa.
Confirmed.
Correct.
Correct. Okay.
Uh,
So how much are we getting?
We are getting 734, 866,
734
8667.
8667. 734
867.
867. Then
867,
the
yeah.
first one.
Which first one? Ah, okay.
I wanted to check an
8125.
alternative for the first one. One alternative is that the 8125, you can do it for 2 months. Then after that, it will still be part of the 18. Then you do it for 4 months. But this is the approach that we understand. So let's stick to this one. It should give you the same answer. How much are you getting?
497.50.
497.50.
Any examiner who will pick this question, it should be 10 marks. 497.50. Where I pick the question, I think it's about 13 marks. But you see, the IC will pick it for 9 marks and those things. Times. When you add, how much?
1225.
1225.
617. 617.
617.
yes.
So this is the borrowing cost to capitalize on existing. Is that not it? So let's go and now calculate the total borrowing cost to capitalize. Now that we know the existing, we can easily calculate that of the specific, then we add the existing, then we are done with the question. Total borrowing cost to capitalize. The FR people, I'm sorry, this question is too big for you. Because I am Amber Williams, but it's good you are here because you still write corporate report. Total borrowing cost to, oh yes. You can't run away from it.
You are learning for the future.
Yes, for the future. Okay, so now let's see. On specific borrowing. On specific borrowing, what do we do?
We have
There
the
was some commitment fee, which is also a cost. I told you
commitment.
that other cost is part of borrowing cost, that's not it. So we are talking about borrowing costs incurred from 1st September 2014 up to 31st May 2015. That's not it. So commitment fee is one-time payment, 0.5% of the 25 million. We have used it somewhere. We got
125.
one something. Yes,
Yeah.
125.
125, 125,000.
Okay. Then the interest cost. Is going to be the 25 million times 4% times 8/12. You agree or you disagree? First August to 31st May is 9 months. Then we take out the August, right? Okay, let's go.
No. So from September to May is 9 months. Oh. From August is 10 months.
Okay, so I should write 9 months right there. Please, your reparto. So you let's count with our fingers. September, October, November, December, January, February, March, April, May, so 9. Yes, so 9 months. You are right. Okay. So times 9 months. Hope I'm showing the board. Times 9 months. No, let me make some correction, then you can look at it. I think there's some small correction to make. Remember, we have made some part payment, true or false? Hello.
Yes.
We pay some 5 million, is that not it?
Yes.
So it means
the
that
25 will be
yes, so that's it. So the 25 million times the 12%. This one will be from, let me add the date. So from 1st September 2014, when we made the first payment. So let's say up to 30th, 31st. Up to 31st. Up to 31st. Up to 31st January 2015. That one, the interest will be 5/12 times 25 million times what? 12%. Do you agree? Then we made some payments. So from 1st February 2014 up to 31st May 2015. That one, the interest will be computed on 20 million. Do you agree?
Yes.
Because at 1st February, we had made part payment of 5 million. Is that not it? Did you get it? Yeah. We are calculating interest on the specific borrowing, but some part payment has been made. So there's no way we can calculate the interest on the whole 25 million. When you make part payment, you pay interest on the remaining amount. Is that not it?
Okay.
More one answer we know.
Oh.
Okay. So this one will be 4/12, right? Times 25 million minus 5 million. Is that not it? So times the 12%. So this will give us the borrowing cost. Then we deduct our
The
investment.
first one is
The first one is what?
1.2. 1.2.
Oh, yes. Oh, keep quiet.
1,250.
Master.
This now wow over disturbing unnecessary maybe with fish. So 1,250,000. That what you're saying? Give me figures. Are you problem?
It's correct.
As well 1,250,000.
The next one is 800.
800,000.
Yeah.
On a more count. So the investment income that we did in workings too, we need to deduct
137,500.
137,500. So when you deduct, whatever we get is the borrowing cost to capitalize on specific borrowing. Then we just add the borrowing cost to capitalize on the existing borrowing. So
I'm
1,225,000
20,37,500.
total borrowing cost 20,37 what?
20,37,500. 500.
Just one way down mobile figures and total borrowing cost.
Yeah,
So man, yeah, know why you are then later make changes. Some people they are there, they are just copying.
3663. 117.
So that's why they are over.
Hey.
This
32 rather. 32.
32.
63. 63.
Friends, one figure now from
63.
Odododio constituency. So be confirmed,
117, yeah.
Did you get it?
Correct. Yes.
So now, this is the solution to the question. I know you may have issues, so the floor is open for questions. Why did we do this? Why did we do that? Why didn't you do that? The floor is open. Let's go to Vivian Yame. Like I said, yeah, I told you yesterday, we are exhausting borrowing costs. If borrowing cost does not drop in your age, I'm fine. But we are doing it in such a way that the borrowing cost should drop. You should be able to score it. Okay. Madam Vivian.
Hello, sir.
Yes.
Good afternoon, sir.
Good afternoon.
Sir, please, the date here, the 1st February 2014 to 31st May 2015.
It should be 15, please.
Thank you very much.
Welcome. Please, any other question? If you don't understand something we've done, you want explanation? So you bear with me that if you had done it together, the board couldn't have contained everything. It would have been bizarre. Is everybody fine?
We'll sit down and go through. Person read it cannot. You have to listen to it again.
Sometimes when we are solving complicated questions with students, we get scared. But sometimes it can discourage students, you understand? So we should also know with the meeting. With the meeting. So home crying over to me. Okay.
Is it, sir?
Yes, sir.
There are 12.08 as the work, that was where I had a something wrong. And because of that, it's
because of the way they frame the
down.
question. Usually work is annual interest on all existing borrowing at the end of the year, expressed as a percentage of all existing borrowing. But this one, they said they are talking of borrowings available during the consortium period of 9 months. Did you get it? During the consortium period, which is 9 months. So we're dealing with the 9-month period. So that was the difference between this question and the ones we have been doing always. Madam Tina.
Yes, Robert.
Yes.
Please, so I just want to go back a bit. The loan interest that they said it was marked up. Please, what does it mean?
The loan interest that they said what?
It was marked up.
Oh, the markup, they are just talking of interest. They said the loan carried a markup of 12% per annum, payable semi-annual. Yeah, payable semi-annual. That's all. The loan was it's a finance thing. The loan was marked up at 12%, meaning the loan attracted an interest of 12%.
Oh, okay.
You know, the interest increases the amount of loan you pay. If you don't pay, it increases it. So the loan carries a markup. It increases by 12%, which is the interest. Yeah.
Okay. Thank you.
Any other issue?
There.
Yes.
Hello, sir.
Yeah, we can hear you.
Then the payable semi-annually. The payable semi-annually, wouldn't that one have any effect on our calculations?
So the semi-annual was supposed to be 6 months. Okay. We were supposed to take 6 months interest. But we realized that in August, we are not capitalizing it. In August, the interest and the investment income are all taken to P&L.
Article.
Why not article? No, what article and I mean article.
Yes, please.
You should do network.
That's why, can you hear me? I didn't come to us, man. Let's go to apart from the question. No, there's
okay.
Yes. So we have question 9 and question 8 left, right? Hello, we have question 9 and 8 left, right?
Yes, sir.
Yes,
well, question 9, I think it's a short question. So just 3 minutes. 3 minutes quite also. Okay, let's make it 5 minutes. See, assuming this simple question, since you said you didn't solve it, you can't give me any feedback. So I'm giving 5 minutes. Assuming you did not see this question and it came in your exam, what would you have done? You've taken a loan and you read it yourself. So I'm pausing the recording. Okay. So somebody should read, then after that you ask your questions.
Zeal. Okay, I'm reading. Zeal Limited is building a dam for federal government. The project will take 10 years to complete. On February 1st, 2011, it took a loan at 12% of 100
Please
million
go to
Ghana
the
cedis.
requirement for us so that it will be easier for us.
Okay, all right. Okay, so Zeal Limited is building a dam for federal government. Required.
No, I mean go to the requirement. You are required to apply the borrowing cost to be capitalized for Z Limited for the year ended 31st December 2011. So we are looking at the first year, right?
Yes, sir.
So if there is no suspension, then the loan was taken on when? 1st February. Is that not it?
Yes,
Same
sir.
way. Yeah.
And they said they started incurring the expenditure on the same date, which means that work commenced on the same date. Is that not it?
Yes, sir.
So which means we'll be looking at 11-month period,
Yeah.
if I'm correct. Is that it?
Yes.
Okay. So we can now start reading.
Zero Limited is building a dam for federal government. The project will take 10 years to complete. On February 1st, 2011, it took a loan of 12% of 100 million Ghana cedis for the expenditures incurred on the same date. On July 1st, 2011, the federal government made first progress payment of 30 million Ghana cedis. Zero Limited had offered employment opportunities to locals of the area. Considering this fact, Zero Limited had offered employment opportunities to the locals of the area. Considering this fact, provincial government has given Zero Limited a grant of 10 million Ghana cedis on October 31st, 2011. Required.
That's all.
The borrowing, yes, that's all.
Okay. So the floor is open. Any question on this? Or it's a very straightforward question.
So in this case, the borrowing cost that you will incur, will you have to take the grant from it before you add it to the project?
No, so the grant, you receive the grant, and then what again? I mean, what again did you receive?
Progress
So
payment.
far,
Please, just a
and the
minute.
payment, the first payment that
Someone is worrying me. Please, just a minute. A minute. Someone is worrying me to do it. So let me get the link for the person. Link with my send is send our friends. My phone. Just a minute. Yeah, so I've sent to the person. So, Mr. Osman, please ask your question again.
I wanted to find out when you are able to ascertain the borrowing costs, and because the fact that you have been given the government grant,
Okay,
you have
so
to
let's go back to the question. A minute. Am I showing the board?
The question.
Yes, you are showing the board.
Oh, so I'm not showing the question on this one.
Question
You
is
are
there.
showing the question rather.
It's the question I'm showing. Okay.
Yeah.
So you've gotten 100 million. The project will take 10 years to complete. On 1st February 2011, it took a loan of 12% of 100 million for the expenditures incurred on the same date. On 1st July 2011, the federal government made first progress payment of 30 million. So that first progress payment 30 million, what do you think will be useful? It will be used to repay part of the loan, right?
Yes.
You see, it's more or less like do this work and let me pay you. Do this work and let me pay you. You understand? So as and when the money is coming, you use it to pay your loan. Is that not it?
Yes.
Yeah. So you have from 1st February 2011 to the 31st June. No, 30th June, right?
Yes, 30th June.
Yes, that's 5 months. you incur an interest of 12% on the 100 million.
Yes.
Then from 1st July up to when another grant was received, when was that?
31st October.
So from 1st July up to 31st October, that one, the interest will be on 70 million. Do you agree?
True.
Then from 31st October up to the end of the year, the interest will be on 100 million
60
times
million.
minus 30 minus 40. That will be on what?
60 million.
On 60 million. So that's the only trick in the question.
Say one again.
So what I mean is that let's understand the question. Z Limited is building a dam for federal government. The project will take 10 years to complete. On February 1st, 2011, it took a loan at 12% of 100 million for the expenditures incurred on the same date. So he took a loan. Z Limited took a loan for that purpose, thinking that, you see, the government work, what happens is that as and when you complete, then they come and measure the progress measurement and then they pay you. Sometimes that's how it is. Is that not it?
To pay you. Yeah.
I mean,
Yes,
we know we brought in some public sector kakra. So we are saying that you do the work, they will pay you, let's say, on installment. Okay. So you've taken a loan of 100 million for a project, and then you have received 30 million payment. That means it will be used to defray part of the loan. Is that not it? Will you go and invest the 30 million? When you know that the return on investment is less than the borrowing cost, you use it to pay part of the loan. Is that not it?
Yes.
Then let's continue. It says that on 3rd July 2011, federal government made first progress payment of 30 million. Z Limited had offered employment opportunities to locals of the area. Considering this fact, provincial government has given Z Limited a grant, that's an award of 10 million, on October 31st, 2011. So that one to be used to defray your costs. So it will reduce the cost of 100 million. So you can see that this is also another new question altogether. Did you get it?
Yeah, yes, please.
Yes,
So, can we solve it to make it simple?
No, yes. Every question that we are solving it. I was only trying to explain to you understand the principle in it. That's all. We are going to solve. See, now if you take out the whole travel to solve all the questions, we'll do that. So that that's why we are here. The 3 weeks must be beneficial. Okay. Shall we?
Well, I have a concern here.
Okay, please ask your question.
So on practical, when a government gives you a contract like this and you go in for a loan, that contract is used as well as collateral to the contract. So I am only getting what you are saying on the fact that because the contract is being used as a collateral, anytime payment is being made, the payment must be made through the bank so that they will be able to deduct whatever they're supposed to deduct from your loan.
Yes, so that makes practical sense.
Otherwise, I don't see the reason why. Yes.
Okay, so otherwise, you don't see the reason why what?
If I want you for loan and you pay me, I should use the lesson to defray while the question did not make mention of it now, I should use it to go and defray the cost. I don't get it.
Okay, so we were trying to also apply rationality. That's why you've taken a loan for a project of 100 million. The loan attracts an interest of 10%.
Yes.
Of 12%. They have made part payment of 30 million to you. You are aware that if you invest the 30 million, you get less than the 12%. What will be the decision that you take? You have to use it to pay part of the loan. Please get
it was not stated that the interest rate for the investment is lower.
Rationally, senior, rationally, I'm just choosing my words so that it doesn't, you don't feel insulted. I'm saying that rationally, men go try to dispute it, but it didn't work. Rationally, return on liquid investment can never be more than any cost of borrowing, external borrowing. Rationally, are you making some sense? But if there's an investment that will yield returns more than the cost of borrowing, then the bank will not give loan again. They will just go and invest in that thing. Please do get it.
Yes, sir. Secondly, the cost of the project was not given. Could it be that the contractor will take advantage and borrow more, which will not necessarily be used for the entire
So they
project?
said it will take 10 years. So the question was concentrating on the first year. So the first year, you took 100 million and then push all of them into the project. And then you have to see some part payment. So as and when the part payment comes in, it will reduce the principal loan, the loan principal, and it will also reduce the interest payment. Did you get it? The concentration is on the first year, cost incurred for the first year. Exactly.
Yes, sir.
Okay, so let's look at the borrowing cost to capitalize. So from 1st February 2020 what? 2011. Up to when we got the first payment. That is 30th June 2011. Then from 1st July 2011 up to 31st October 2011. Then from 1st December 2011 up to 31st December. Is that correct?
Yes.
2011. So in all, it should be 11 months, right?
Yes, 11 months.
So this should be 5.
Yes.
Over 12 times 100
Then
million.
the second one will be 4. Is that it?
4. Yes.
And the third one will be 2. Okay. So you multiply by the rate, which is 12% times 100 million. This one is 12%. This one is it 12%?
Yes, 12%.
Yeah, 12% times 100 million minus what? 30 million. Sorry, this one should be 2 over 12, not 11. 12% times 100 million minus what?
30 minus 10.
30 minus 10. So that's all. Whatever you get is the borrowing cost capitalized for the year.
The first one is 5 million.
But I'm telling your hand is up.
Yes, sir. So, sir, from what I'm seeing, there are so many assumptions here because I was seeing the 10 years duration to complete this work. So, per the loan that they went in for,
8 million.
it have to spread it. That's how I was seeing it. But I can see that by your explanation.
They said
that
they used all immediately. They said they used all immediately. We don't even care whether they used all or they didn't use all. What we care is that they've taken loan of 100 million. And there has been some money which must be used to pay part of the loan. So it reduced the loan payment. That's all what we care. Whether he used all or not, we know that the loan has been taken. And just like Mr. Osman said, it may be that perhaps the payment is even made through that bank and it will be used to reduce the loan. Even if the payment is not made through that bank, rationally, you have to use it to pay part of the loan. Because if you go and invest it in liquid investment, your interest on borrowing will be more than the return on investment. It makes sense. The question said calculate the borrowing cost for the first year. Check the question was 2011. Is that what the borrowing cost to capitalize? Yeah. There is a borrowing cost for the 10 years.
Yeah. You see, Sir Robert, even though they said for the year 2011, I know in some cases, even though it's for the same year, but it will take you, let's say, 6 months. I get it. So, I was looking at the duration of the project, where I calculate it in months and apportion it accordingly. That's how I was saying it.
No.
And that's how I'm saying.
The 12%, the 12% they gave, the 12% they give is annual rate. Is that not it?
Yeah.
Assuming there was no repayment, the borrowing cost to calculate would have been 12% of 100 million times 12 over 12. Times 11 over 12. Do you agree?
Yes, please.
That is for 2011. That would have been a borrowing cost to capitalize. We are breaking it because some payments were made, some amount had been received, which must be used as repayment. So as and when the payment comes in, we recalculate the interest so that it reduce the principal and reduce the interest as well.
Okay, so
to me, any assumption that
you
is not in line with this, I will not take it. Okay.
So when I'm doing something like this, I have to concentrate on the year.
Yes, the question says that on the current year. Yes, on the current year. That's what the question says. Say 2011.
Okay.
Okay, so please, what's the figure? The next one.
2.8 million.
The next figure.
1.2 million. 9 million.
And so FR people wait the moody. You would think it's FR. Go on and say here. Let's go and look at the last question under borrowing cost. Borrowing cost has taken all our time for an inspection. But no problem. It is still what it is. Is that not it? Monday, Tuesday, Wednesday, Friday. All these days are for any special. So I believe we can do a lot. So that's question what? Is it question 10? The last question is question what?
8.
Question 8. Okay, let's go to that question 2 so that you go and read and then let's see if you have a problem with that. So the A part there, these are all theoretical questions that we know. Let's go to the B part. Assume that borrowing costs are capitalized where appropriate. Calculate the kind amount to be included in the non-current assets in respect of the shopping mall. 2. The total amount to be charged to the income statement in respect of interest expense and depreciation. There's a question of the MIA, PPE, and the borrowing costs put together. Okay. Somebody should read the question. I think let's read the question and then we ask the questions alongside, then we solve together. Is that not it? Hello?
Hi.
Let's read the question. I think after this, we would have taken enough dose for the day.
Okay.
Melodious. Let's go.
8. IAS 23 borrowing cost regulates the extent to which entities are allowed to capitalize borrowing costs incurred on money borrowed to finance the acquisition of certain assets. Anyway, then, B Limited is a retail supermarket chain. Limited. It's a retail supermarket. team, which constructs its own malls. On 1st January 2010, it started the construction of a supermarket. It acquired 50-year leasehold interest in the site for 3 million cedis. The construction of the building cost 9 million, and fixtures and fittings cost 6 million. Fixtures and fittings would have an estimated economic useful life of 10 years. The construction was completed on 30th September 2010 and was put to use immediately. The building is expected to have a useful life of 50 years.
Okay.
Biakuya Limited borrowed 80 million cedis on 1st January 2010 to finance the project.
So pause for us. Pause for us. Oh, as you say. Okay, Shadi. They took a loan on 1st January. Let's ask ourselves. On 1st January, borrowing costs will be incurred then. We'll start incurring borrowing costs. But would the other two conditions be met on 1st January? Was it met on 1st January? They said on 1st January 2010, it started the construction of a supermarket. So meaning that all the three conditions were met on 1st January, true or false?
True.
Okay. So you can continue now.
Okay. The loan carried an interest rate of 10% per annum and was repaid on 30th June 2011. Required. State the conditions to be met for capitalization of borrowing costs to commence. And B, capitalization of borrowing costs to cease. B, assuming that borrowing costs.
So let's solve it quickly. What are the conditions that have been met before commencement of capitalization?
Borrowing costs must be incurred.
Borrowing costs must be incurred.
Expenditure has been incurred.
Expenditure must be incurred.
Expenditure must be incurred.
Necessary activities must be taking place.
Essential activities must be carried on.
Okay, to make the asset ready for its intended use. Is that not it?
Yeah.
Exactly so.
Yes, sir.
More being pop.
Yes, young.
The way I'm been me one come I've been to some. Now let's look at what about the situation? The conditions that has to be met before you can cease capitalization.
Upon completion of the project or when it's ready to be.
So capitalization is when the asset is ready for use. Yes. And okay, what again?
Hey, we can.
Okay. And can be count.
When it is in phases, the part that is completed.
Yes.
On the part.
Completed. Once it continues on the part, yet to be what? Completed. Hey, whopping, pop. So we are saying that where the project is completed in parts, then borrowing costs capitalization should cease on the part completed. Once it continues on the part, yet to be what? Completed. Did you get it?
Yes, please.
Okay. So let's now come to the question. Please, we are supposed to calculate the borrowing cost, add it to the cost of the asset, and then depreciate. Is that not it? Then after that, we come and look at the borrowing cost that should be expense in the P&L. We know that. Okay, let's see. Is there any trick in this question? Is there any trick? Who can tell me a trick that is in the question? Okay, so are you aware that we'll calculate the borrowing cost on the 80 million from 1st January up to when did they end? 30th September. That is 9 months, right? Right?
Yes, sir.
Yeah.
After calculating the borrowing cost to capitalize, we are not going to have shopping mall as one item on the financial statement. It is the component of the shopping mall that we are going to recognize, right?
Yes.
So we have a leasehold interest Leasehold interest is land. Do you know that?
Land. Yes.
So we have leasehold interest of 3 million, burden of 9 million, fixtures and fittings of 6 million, making up the more. So the borrowing cost must be shared among these. The trick is that land is naturally completed. So when you are sharing the borrowing cost, you not share some to the land. You share it among the fixtures and fittings and the building. Is that clear?
Yes, please.
Secret.
Robert.
Yes.
The leasehold interest in land. Okay, I'm assuming that is a leasehold land and not a freehold.
Yes, so for depreciation, we depreciate because it's a leasehold land.
Okay.
But when you talk of borrowing costs, whether leasehold land or freehold land, it's still land. It's naturally completed.
Okay. All right.
So you don't charge borrowing costs on land.
Okay.
Hey, more one say minimum.
So we are here.
Okay. That very day, I'll just be somewhere chilling. Hey, your number have reduced to 88. Should I pose the question? Should I ask
Are
the
you
question?
also?
Anna Monso, Mubakwana. A yes, the navy says that for no. Say Anna Monso, Mubakwana.
Timua to like welcome.
Okay. It is when you are getting towards your exam, you appreciate what we have done for today. You appreciate it. And I pray that there will be a question on borrowing costs and earnings per share. Then our financial instruments, what I've chosen. At least only 2 questions over. You will come and thank us later. Workings. Number 1.
Oh.
We are talking of. Is that one to a bedroom sound?
Stress.
Please, you all heard that song, right? Bẹ́ẹ̀ma mbo na ọ̀tẹ̀ntì mu no. Bẹ́ẹ̀ma na ọ̀tẹ̀ntì mu no hwẹ́. Ti na yẹn fire service ana.
Everything is under control.
Everything is under control. Okay.
Yes, sir.
Okay, no problem. So that will be 9/12 times. Please, what is the rate? Please, what is the rate?
10%.
So that will give us how much?
Oh, no, 1.35 billion. 1,350,000.
1,350,000. Nicely like this. Now, let's go and look at the asset there, how we are going to apportion and all those things. So carrying amount of the building, the more. Can we move and do the B part? Okay, B part. When we get there, we can calculate. Can somebody tell us how much borrowing cost will be taken to the P&L? When does the year end?
31st December.
31st December. So the remaining 3 months interest will be taken to P&L. Is that not it? Is that not it? This one we're not giving any scheduled payments and those things. So okay. Carrying amount. Let's see. So we have land. Leasehold interest. which is land. We have building. Then we have the what? There's another one.
Fittings.
How I'm showing the board.
Exactly.
Then you add the total because they want the kind amount for the whole month.
Right.
So what is the cost of the land? 3 million, right?
Yeah, 3 million.
What is the cost of the building?
9 million.
9 million. I should be writing them in full, right? So that you don't face problems. So this is 3 million. Please, features and fittings.
6 million.
6 million.
So the total will be how much?
18
million.
So it means that if they finance everything with the loan. Okay. Now, borrowing cost to capitalize. Do you know that we are going to share it in a ratio of 9:6? We are going to share the 1,350,000 in the ratio of 9:6. Do you agree?
Yes.
We are sharing it to only the building and the features. 9 million and 6 million. We have to share the borrowing cost to capitalize in the ratio of their cost. Is that not it?
Yeah.
Did you get it?
Yes, sir.
Okay. Building 9/15 times 135 will give us how much?
810.
610,000. Features and fittings.
540.
Total.
1350.
So this will give us the current amount on completion, right?
Yes.
More one 7.
Yeah, here.
Current amount as at 30th September 2010. This will be 3 million. This will be 9,810,000. This will be 6,540,000. Then we have the total 90,350,000.
Robert.
Yes.
Would you be wrong if you do it maybe for the building example, maybe 9 million over 50 million times 1.35 million?
Oh, that's the correct thing.
Okay.
The 9:6, I mean 9 million is to 6 million.
Okay.
Okay. So depreciation. I should have shown working. So in either you have to show working. You have to write borrowing cost to capitalize. 9 million over 50 million times 135. Then you push it to 810. Then move to the next line. 6 million over 50 million times 135. Then you push it to feature. Did you get it?
Yes.
Did you get it? Well, in this answer, if you don't show working, you lose the mark for the working side. So depreciation. The leasehold land, what will be the depreciation? The leasehold is for how many years?
50 years.
50 years.
For 50 years. There's some secret. Look at it, oh, secret. So depreciation land is going to be from 1st January. When was the land acquired?
Where is the
1st January 2010 up to 31st December 2010. You are aware that the land was ready for use at the beginning of the year, true of us. So that is where depreciation will start. But the building and fixtures, they were ready for use on 30th September. So that's when their depreciation will start. So once we depreciate building and fixture for 4 months, land will be 1 year. Is that clear? More one say
Yeah.
You see that they have tricked you on depreciation too. So land will be 3 million over how many years? 50
years.
Over 50 years times 12 over 12. So that will give us how much?
$60,000.
What?
60,000.
50,000.
60.
60,000. Then total will be 9,810,000 over how many years? Is that 150 years?
Yeah, 50 years.
So times 3 over 12, right? Burden will be from 1st October 2010 up to 31st December 2010. Do you agree? Do you agree?
Yes, please. You agree.
Okay. Too many. That will be your song after the release of the results.
Amen.
This year's result is not that bad. It's not that bad at all. I mean, we are done with marking.
Hey.
We finished yesterday. By Tuesday, your results will be ready. Yeah, that wait and do the necessary checks at the end of the month, then release it for you. If you can do month end, we just release, We are good in releasing, just release, that's all. So the next one will be 6,540,000 all over how many years? The fixtures for how many years?
10 years.
10 years.
Mommy to you. Figures and numbers. Figures and numbers. What are the figures and numbers?
49050.
49250.
050.
Umami tum tum. Lo 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 lo. Yeah. Features and fittings. Fixtures and fittings.
163,500.
163,500.
500.
Chance now more Sisiano more culture. Just say F1 on the crown. You man can be true. And what the no be so. This particular question has dropped once. And it's a nice question that I'm expecting it to have been repeated by now, but well, when I get the opportunity, I will repeat this question. Please let the data. How much are you getting?
$540,000.
What? And how much are you getting?
Now you down on the first one, that's a 2940.
The next. 2940, they say Air Force. Yeah. Mr. Osman didn't know about Jim. Mr. Osman for one Jim.
976095.
9760 what?
976950.
Right.
You know, Baka.
765.
No, Baka. What show be my the next one.
76,500.
And the next one.
19,077 450.
13.
19.
19.
19.
19.
077 450.
Okay. More one 7 year.
Yeah.
So let's look at the B part. Then we should look at the depreciation and the I that you just added. So income statement. Profit or loss. So depreciation will be 60,000 plus 49,050 plus 163,500. So that will give us how much? So that the one who have been sent a PDF, are you here? But now please add this one and name it as IAS 23/5 borrowing cost. Okay. So that I can put it on your drive for you. If I can get it, I can just update it this afternoon before I leave the house. How much are we getting?
272,550.
272,550. Then let's look at the interest cost or the finance cost. There's 80 million times, is it 12%? Is it 12?
10.
10. I said they use 12% per. So times. Is that what?
It's 10%.
Yeah, so how much are we getting?
450,000.
They are expensive. We want to put all of that in brackets in the income statement. That's all. And what the this question came for, I think, 9 marks or so. So technically, I'm done with all the 13 questions. Take your time and go through.
So the PPE.
They are still on the platform. If you go through and share issues, you can always ask the question on the platform. I always prefer questions on platform than individual questions, so that we all benefit from those questions. Please do get it. Maybe the question you ask will be the trick in the exam question that you write, so everybody can benefit. So please, let's start taking our pictures. Our photographer, are you there?
Ade.
So aren't you supposed to do the PPE aspect, the non-current asset side?
No, they just said we should calculate the current amount, which we have done.
Okay.
And then for the second one, they said we should show the depreciation of finance costs in the profit or loss. That's what we've done. Please, can I move? Please, can I move?
Yes, sir.
Can move.
The hello, sir, are you asking a question?
You can move.
I should move? Okay.
Can move.
A minute. Are we taking both this and the question 9?
No, sir.
Yes.
Okay.
Can move now.
Yes, sir.
Yes.
The one who has been sharing the PDF, are you here?
I'm here, sir.
Okay. So name it well for us, I beg you. So I will just post it right now for you.
Is that I should name it?
You should name it at IAS 23/5. If the slide cannot, I'll just write IAS 23 and IFRS 5.
Okay.
Borrowing cost. Okay.
All right.
Okay. Can I move?
You can move.
Okay, so this is the last page. I think we've taken enough dose for today, is that not it?
Okay.
God willing, tomorrow we've eaten into earnings per share, but no problem. Tomorrow we'll start with the earnings per share in the evening, and then you'll be fine. But let me just give you a gist of okay. So we have a whole tour list for earnings per share. IAS 33. We'll be looking at the key definitions. Then we'll look at basic earnings per share with the tricks. We'll look at how to calculate the weighted number of shares. Weighted number of shares. That's why we have to look at 4 market price. We have to look at bonus. We have to look at right issue. We have to look at share splits. We have to look at share consolidation. Wanted to do share repurchase, but I remember I've seen one question on the either ACC or I see. I can't find it. Yeah, so I'm not meeting me fact because each of them there will be series of exam type questions. If I don't get the exam type, I'll find it difficult to maybe show you how to be structured. But technically, these are the common ones that you'll be seeing in your exam. Then we now come and concentrate on what you don't like. Diluted earnings, let's say. You don't like it at all. But I believe that within the 5 days, you will not only like it, you will love it. You love it. So we look at potential ordinary shares. You look at converted potential ordinary shares. We look at options and warrants. Options and warrants. Then we now solve. As and when we pick, there will be solving questions. Solve questions. I'm trying to see which of the questions I should reduce because I have about 22 questions for now. So we have 4 meetings or 5 meetings for that. So let's see how it goes. We have about, let me check the timetable. How many meetings we have for the end special apart from today?
I check the time.
We have Monday to Wednesday.
Yeah, so I'm checking. Monday to Wednesday is any special. That is 17 to 9. Then, so why did I do it like
Monday
this?
to Wednesday.
Yeah, Monday to Wednesday. Then the following Monday to Wednesday too. Okay. So we have about 6 meetings left. So then I think I can give you all the 22 or so questions or whatever 20 questions. I can give you all. Then the 6 meetings, we'll see the number we can do. Then that once we'll start the main class on the 5th April. So just after the 26th, whatever question that we have, so we'll end there so that we can have time for the financial instruments. And then IFSAS 26 and 21 for the public sector students. So I think I'll send them to you by tomorrow so that you can print them. All right. Please don't print them enough. I'll think I have to watermark on the document that do not print from the office. So that you don't print from the office. When you are printing at your boss, he says, the lecturer said don't print from the office.
Sir Robert.
Is it on your appointment letter to be printing those things from the office?
So
it's an offense under the it's an offense under the PFM Act.
You will use the opportunity.
You want to